What if I told you that two people earning the exact same salary can end up thousands of dollars apart at the end of the year, and the only reason is which state they live in? Not because one works harder, not because one earns more, purely because of taxes. In the highest tax state, residents hand over more than 13% of their income to state and local governments. In the lowest, it's under 5%. Today we're counting down the 10 states with the lowest taxes in America in 2026, and the surprising catch hiding behind the words "no income tax." By the end, you'll know exactly which state fits your income, your spending, and your life, and how to avoid the states that only look cheap on paper. Here's why this matters more than almost any other money decision you'll make. Your salary is negotiated once. Your rent, you can shop around. But taxes hit you every paycheck, every purchase, and every year you own a home, automatically, for as long as you live there. Over a decade, the gap between a high tax and a low tax state can add up to tens of thousands of dollars, enough for a down payment, a car, or years of retirement savings. And most people never factor it in when they choose where to live. But there's a trap, too. A state can advertise no income tax and still quietly take more of your money through property and sales taxes. So we're not ranking by hype. We're ranking by the real, total tax burden. One quick word on how this ranking works, because low tax is one of the most misunderstood phrases in personal finance. We're not using tax rates, which change with your income and situation. We're using the total tax burden, the share of the average resident's income that actually goes to state and local taxes, measured by WalletHub using Tax Policy Center data. It adds up 3 things: property taxes, individual income taxes, and sales and excise taxes. That's the honest number because it captures everything a state takes, not just the headline rate. The national picture ranges from over 13% down to under 5%. Every state on this list sits near the very bottom. Let's start the countdown at number 10. One more thing. This measures what an average resident actually pays, so it cuts through the marketing and shows you the real cost of living somewhere, tax-wise. Before we count down, one myth to kill. 7 states charge no individual income tax at all: Alaska, Florida, Nevada, South Dakota, Tennessee, Texas, and Wyoming. Sounds like a slam dunk, right? But watch closely, because not all 7 make our lowest total tax list. When a state gives up income tax, it usually makes the money back somewhere else, through higher sales taxes, higher property taxes, or both. So no income tax is a headline, not the whole story. Keep that in mind as the numbers roll in. Number 10, Oklahoma, with a total tax burden of just 7.05%. Oklahoma is a genuinely balanced, low-tax state where nothing is punishing. Property taxes are among the lowest in the country, at about 1.8% of income. The income tax is light at 1.8% as well, and sales tax sits in the middle. So you're not dodging one big tax by overpaying another. Everything is simply low. Pair that with one of the cheapest costs of living in America, and Oklahoma becomes a quietly powerful place to keep more of what you earn. It's especially strong for homeowners and families who want low, predictable bills across the board, rather than a flashy zero income tax headline that costs them elsewhere. Number 9, Idaho at 7.04%. Idaho has been one of the fastest growing states in the country, and its tax profile is a big reason why. Property taxes are low, under 2% of income, and while it does have an income tax, the state has been cutting it, moving to a low, flat rate. Add a moderate sales tax and you get a light overall load. What makes Idaho stand out is the combination: low taxes plus mountains, rivers, and booming cities like Boise. The trade-off is that all that demand has pushed home prices up, so you'll save on taxes but pay more for the house. For remote workers and outdoor lovers who can afford the buy-in, it's a fantastic tax home. Number 8, North Dakota at 7.02%. North Dakota is the quiet tax haven most people never think about. Its individual income tax burden is one of the lowest in the entire nation, under 1% of income, thanks partly to oil and gas revenue that lets the state keep rates rock bottom. Property and sales taxes are moderate, and the state has repeatedly cut income taxes toward zero for most earners. It's cold, it's remote, and the population is small. But if your priority is keeping your paycheck and you don't mind a real winter, few states let you keep more of it. Best for high earners and remote workers who value low income tax above all. Number 7, Wyoming, at 6.70%. And here's where the no income tax states start showing up. Wyoming charges zero individual income tax, zero corporate income tax, and has a low sales tax. How does it pay for everything? Minerals. Coal, oil, and gas revenue effectively subsidize residents' tax bills. The result is a state that's become a magnet for wealthy retirees and business owners who want to protect their income. The one number to watch is property tax, which is a bit higher here as a share of income. But for anyone whose wealth comes from a salary, a business, or investments, Wyoming is one of the most tax-friendly places in America. Wide open, low population, and it simply doesn't tax what you earn. Number 6, South Dakota at 6.38%. South Dakota is a favorite of financial planners for a reason. No individual income tax, no corporate income tax, and famously friendly trust and estate laws that attract serious money. For everyday residents, that means your wages and investment income are yours to keep. The state leans on a moderate sales tax to fund itself, so you'll feel it a little at the register, but property taxes are reasonable. With a low cost of living, growing cities like Sioux Falls, and no tax on income, South Dakota is a standout for retirees, remote workers, and anyone building wealth who wants to shield it. The winters are harsh. That's the price of admission. It's also one of the few states with no tax on retirement income, which is why so many retirees quietly make it their legal home base. Number 5, Delaware at 6.28%. And this one breaks the pattern in a fascinating way. Delaware actually has an income tax, so how is it a top 5 lowest tax state? Because it charges no sales tax at all, zero, on everything, all the time. And its property taxes are among the lowest in the nation. That combination is rare and powerful, especially if you spend a lot. No sales tax means every purchase, from a car to groceries to electronics, is instantly cheaper than almost anywhere else. Add a small, walkable state on the East Coast, close to Philadelphia, Baltimore, and D.C., plus tax-friendly treatment of retirement income, and Delaware becomes a hidden gem, particularly for retirees and big spenders who benefit most from that zero sales tax rule. Number 4, Florida at 6.27%. The most popular low-tax destination in the entire country. Florida charges no individual income tax, and that, combined with sunshine, beaches, and no state estate tax, is why millions have moved there over the last decade. Your salary, your business income, your retirement withdrawals, none of it is taxed by the state. Florida makes its money through sales taxes and tourism, so visitors help foot the bill. The trade-offs are real and worth knowing. Property insurance has gotten expensive thanks to hurricane risk, and housing has climbed as demand surged. But on pure taxes, Florida delivers exactly what it promises, and for retirees and high earners, that's a very big deal. And because there's no state tax on Social Security, pensions, or 401k withdrawals, Florida is a retirement machine, letting your savings stretch dramatically further in your later years. Number 3, Tennessee at 6.21%. Tennessee is the no-income tax state that also happens to be genuinely affordable to live in, a rare double win. Not a dime of your wages or salary goes to state income tax. Property taxes are low too, among the lightest in the country. So how does Tennessee stay funded? Sales tax. It has one of the highest combined sales tax rates in America, so you'll pay noticeably more at the register. For most people, that trade is a clear winner, because you control your spending, but you can't control what income tax takes. Add Nashville's booming economy, no-tax music city culture, and a low cost of living, and Tennessee is one of the best all-around tax homes in the nation. Number 2, New Hampshire, at just 5.38%. New Hampshire's state motto is "Live free or die." And its tax code takes that seriously. There's no general sales tax, nothing added at the register, and no tax on earned wages. For years, it taxed interest and dividends, but even that has been phased out, making it effectively income tax-free now. So both of the two biggest everyday taxes are gone. The catch, and it's a real one, property taxes here are among the highest in the entire country, because that's how towns fund their schools and services. So if you rent or own a modest home, New Hampshire is extraordinary. If you buy a big house, more of the cost shifts to property tax. For most residents, though, it's one of the lightest tax loads in America. And the #1 lowest tax state in America in 2026 is Alaska, with a total tax burden of just 4.92%, by far the lowest in the entire country. Alaska is in a league of its own. There's no state income tax and no statewide sales tax, two of the three big taxes simply gone. Property taxes exist, but the overall load is tiny. And here's the part that sounds made up. Alaska doesn't just skip taxing you, it often pays you. Through the Permanent Fund Dividend, funded by oil revenue, the state sends eligible residents a check every year, sometimes over $1,000 per person. So instead of the government taking a slice of your income, it hands you one. The catch is everything else. The cost of goods is high because so much is shipped in, and the climate and isolation aren't for everyone. But on taxes alone, no state in America comes close. Alaska is the champion. Let's see it side by side. Here's the total tax burden of our top lowest states, next to Hawaii, the highest in the nation at over 13%. Look at that gap. Alaska's residents keep almost 9 cents more of every dollar than Hawaii's do. On a $70,000 income, that's the difference between paying around $3,400 in state and local taxes versus over $9,300. Same salary, a $6,000 swing every single year, just from geography. Here's the real takeaway. Taxes are the silent, automatic force shaping your finances. And unlike almost everything else, you can change yours completely just by changing your address. But cheap taxes only matter if the rest of the math works. So pair this with cost of living, jobs, and lifestyle before you move. If you want the perfect companion to this list, watch our video on the 10 cheapest states to live in America. And if you like what we're doing, please consider subscribing to our channel and turning on the notification bell, so you're notified anytime we upload a new video. And if you have a topic you want us to talk about, please put it in the comment section. Thank you so much for watching, and I'll see you in the next one.